In this video, I will reveal the Florida real estate investment blueprint and the 3 non-negotiable laws of investing in the Sunshine State. By the end of this video, you will learn the critical legal framework that protects successful investors and destroys those who ignore it. I'm Santiago Cueto, board certified international business law expert and best-selling author based right here in Miami, Florida. I've helped investors structure millions of deals in Florida real estate, and I've watched others lose fortunes by breaking laws they didn't know existed. And it's no surprise that Florida is the #1 state for real estate investment right now. But here's what nobody tells you. There are legal landmines everywhere. One wrong move and you lose everything. Florida is not like other states. The rules here are completely different. What worked in Texas won't work here. What worked in California will get you sued here. I had a client fly in from New York last month. He owned 20 rental properties up north. He wanted to replicate his success here in Florida. He tried using the same strategies, and within 6 months, he was bleeding cash. Insurance costs destroyed his margins. He didn't understand the legal protections available, and he left money on the table. Don't make his mistakes. Today, I'm giving you the blueprint. These 3 laws are non-negotiable. Break them, and you will fail. Follow them, and you'll have an unfair advantage. All right, let's start with the most powerful asset protection law in Florida. Law number 1 is about protection. Florida gives you something no other state can match. It's called Homestead protection. This is your ultimate shield, and here's how powerful this is. Your primary residence in Florida cannot be touched by creditors. Someone sues you and wins, they cannot take your home. You file bankruptcy, your home is protected. A business deal goes sideways, your home is safe. There is no dollar amount on that protection. Read that again. No dollar amount. You could own a beachfront property worth $10 million, fully protected. New York caps Homestead at $170,000. California, they cap it at $600,000. Florida, unlimited protection. But here's where investors get confused. This only protects your primary residence. Your rental properties don't get this shield. Your fix and flip projects don't qualify. Your vacation rental, that doesn't count. Only the home where you actually live. This completely changes your investment strategy. Smart investors structure their portfolio around this protection. They keep significant equity in their primary residence. They hold investment properties in separate legal entities. They build a fortress around their personal wealth. Let me give you a real-world example of this. I worked with an investor who owned 15 properties across Florida counties. She lived in one property in Orlando, and that was her homestead. The other 14 properties were held in 5 different LLCs. So when a tenant sued over an injury at one rental, the lawsuit went after that specific LLC. Her homestead was untouchable. Her other properties, those were shielded. And her personal bank accounts were completely safe. She understood the game. And here's something critical for out-of-state investors. You must actually live in Florida to claim homestead. You can't buy a property from New York and call it your homestead. You need to establish Florida residency. You need to live here permanently. And this is your primary home. Now, the tax benefits stack on top of the legal protection. Homestead properties qualify for up to $50,000 in property tax exemptions. That's real money saved every single year. Your investment properties get 0 exemptions. Only your homestead qualifies. You need to remember that. There's also something called portability. Let's say you sell your homestead and buy a nicer one. You can transfer your tax benefits to the new property. Most investors don't know this exists. It's a huge advantage when you're upgrading your primary residence. And one more critical point on this. If you're married, both spouses need to agree before selling or mortgaging the homestead. Florida law requires dual signatures, and this protects families from one spouse making reckless decisions. It's another layer of protection built into the law. Bottom line, your homestead is your fortress. Max it out, Live in the nicest house you can afford as your primary residence, and hold everything else in proper legal structures. This is non-negotiable law number one, protection. Now let's talk about the expense that destroys more deals than anything else in Florida. This brings me to law number two, and this will determine whether you succeed or fail in Florida real estate. You must master insurance. There's no way around this. Insurance in Florida is completely unpredictable right now. Rates have exploded. Companies are leaving the state. The market is in chaos. If you don't understand this, you will lose money. The numbers are staggering. Property insurance rates jumped over 40% in the last 2 years, and some areas saw increases above 100%. You heard that right, 100% in 2 years. And coastal properties got hit even harder. This isn't even slowing down. Now here's what this means for your investment. You buy a rental property for $400,000. You calculate your monthly expenses. Mortgage is $1,800. Property taxes are another $400. Then insurance hits you. It could be $300 per month, and it could be $1,000 per month. That range destroys your cash flow projections. I've seen investors buy rental properties with beautiful cap rates on paper. Then insurance comes in 3 times higher than they expected. Suddenly, you're losing money every single month. That deal that looked amazing is now a liability. Citizen Property Insurance is Florida's insurer of last resort. This is where you end up when no one else will cover you. Citizens isn't cheap. Their rates keep increasing. They're actively trying to reduce their policy count. That means pushing people to private insurers who charge even more. And location determines everything with insurance. Coastal properties pay massive premiums. Properties near previous hurricane damage pay even more. Elevation also matters. Construction type matters. Age of roof matters. A 25-year-old roof, you may not be able to get covered at any price. So here's your blueprint strategy. Before you make an offer on any property, get real insurance quotes, not estimates, actual binding quotes from multiple carriers. Call at least 3 insurance agents. Tell them the exact property address and get it in writing. This is your real cost. Never trust the seller's insurance numbers. Their policy doesn't transfer to you, and their rates don't apply to you. Your risk profile is completely different, and their numbers are worthless for your calculations. And wind mitigation inspections are your secret weapon. These cost around $400. A certified inspector documents all hurricane protection features, impact windows, reinforced roof attachments, hurricane shutters, opening protection. These documented features can cut your premiums by 20 to 30%. On a $2,000 annual premium, that's $400 to $600 saved every single year. And flood insurance, you got to remember, that's completely separate. Standard property insurance doesn't cover flooding. You need to check FEMA flood maps before buying. If the property is in a high-risk flood zone and you're getting a mortgage, flood insurance is mandatory. That's another monthly expense hitting your returns. And here's something most investors miss. Vacant property costs more to insure than actually occupied property. You're renovating a rental between tenants? Well, you need vacant property coverage. You're holding a property while looking for the right buyer? Vacant coverage. Budget for this premium increase. And one more critical point. If you're buying investment properties, you need landlord insurance, not homeowners insurance. Landlord policies cover different risks. They're structured differently. They cost more. Make sure you're getting quotes for the right type of policy. Insurance is law number 2. Get this wrong and nothing else matters. Your cash flow disappears. Your profits vanish. Treat this seriously from day one. Now, before we get to law number 3, I need to ask you something. If this information is valuable, do me a favor and hit that like button right now. Subscribe to my channel for weekly Florida real estate and business law content. These insights could save you tens of thousands of dollars every single month. Now let's talk about keeping more of your profits. And that gets to law number 3, and it's all about wealth preservation. Florida's tax structure gives you a massive advantage, but only if you understand how to use it properly. Florida has no state income tax. Everyone knows this, but most investors don't understand the full impact. All your rental income from Florida properties, no state tax. Capital gains when you sell, no state tax. Profits from your real estate business, you got it, no state tax. This is massive for your long-term wealth building. Let's run some real numbers. You own 3 rental properties generating $60,000 in annual rental income. In California, you'd pay about $7,000 in state taxes on that rental income. In New York, about $5,000. In Florida, 0. You keep every dollar at the state level. Now let's say you sell one of those properties for $200,000 profit. California would take $26,000 in state capital gains tax. New York would take about $17,000. Florida, you guessed it, 0. That's real money staying in your pocket. And this compounds over time. 10 years of investing, multiple properties, multiple sales. The tax savings add up to hundreds of thousands of dollars. This is why serious investors are flooding into Florida. But there are critical details you gotta understand. The Save Our Homes Amendment caps assessment increases at 3% annually for homestead properties. Your house value could jump 15% in a year. Your taxable assessment only goes up 3%. This saves you massive money in property taxes. Investment properties don't get this protection. Your rental property assessment can increase 10% in 1 year. I've seen it jump 15%. There's no cap. Your property taxes on investment properties can skyrocket. Budget for this reality. Now, documentary stamps hit every real estate transaction in Florida. You can pay roughly 70 cents per $100 of purchase price. On a $500,000 property, that's $3,500 in documentary stamps. This is a closing cost you cannot avoid. Factor it in every deal you analyze. If you're a foreign investor, FIRPTA withholding applies to you also. The IRS withholds 15% of your sale proceeds when you sell U.S. real estate. Sell a property for $600,000, that's $90,000 gets withheld at closing. You can file to get it back later, but it impacts your cash flow immediately. Plan accordingly. So here's your blueprint move. Set up a Florida LLC for your investment properties. This creates separation between your personal assets and business assets. It provides liability protection, and it simplifies bookkeeping. Your LLC can hold multiple properties. You can also create separate LLCs for separate property types or locations. Some sophisticated investors use what's called a series LLC structures. One master LLC can have multiple series underneath it. Each series holds different properties, and each series has its own liability protection. But you file one tax return for the master LLC. This provides protection with less administrative burdens. And make sure you're tracking all your expenses properly. Property management fees, repairs and maintenance, property taxes, insurance, mortgage interest, travel to inspect properties, all of these are deductible business expenses, so you want to document everything. Keep the receipts and use separate bank accounts for your real estate business. Depreciation is your friend in real estate. You can depreciate residential rental property over 27 and a half years. This creates a paper loss that reduces your taxable income. You're making cash flow, but showing a tax loss. This is completely legal and completely powerful. Florida gives you the tax advantages, but you must structure it correctly. You must track properly, and you must separate business from personal. This is non-negotiable law number 3. Let's bring this all together. The Florida Real Estate Investment Blueprint has 3 non-negotiable laws. Number 1, you need to master homestead protection. Your primary residence is your fortress. It has unlimited creditor protection. Max out your equity here. Hold all investment properties in separate legal entities. Law number 2 is insurance. Insurance will make or break every deal you analyze. Get real quotes before you buy. Never trust sellers' numbers, and factor in wind mitigation. Understand flood requirements and budget conservative because rates keep rising. And law number 3, Florida's no state income tax is a massive advantage in wealth preservation. You keep more of your rental income, you keep more of your capital gains, but you must structure properly with LLCs. Track your expenses. Understand the difference between homestead and investment property tax treatment. Florida is the hottest real estate market in America for a reason. Population growth is exploding. Job market is strong. Business-friendly environment. No state income tax. The opportunities are massive right now. But opportunity without knowledge is dangerous. You need the legal framework. You need proper structure. And you need to follow these 3 laws. If you found this video valuable, make sure you like it and subscribe to my channel. I post weekly content on Florida real estate law, business formation, and asset protection and investment strategies every week. Hit that notification bell so you never miss a video that could save you from a 6-figure mistake. I'm Santiago Cueto, your Florida business attorney. Be sure to watch more of my videos right here.